And we're back with part two. Why is it going to leave this zone? Why doesn't it want to come up to the one thing you want to take in consideration? Okay, does market create liquidity? Yes, it have created liquidity within this area, and also can potentially continue on creating liquidity over here. As you can see, when market comes back into that zone, it created some liquidity. It has a reason for market to continue going to the upside and rebalance itself from this previous area. Now, when the market went ahead and rebalanced itself, you can see that it had a spike to the upside. Now, this spike to the upside went ahead and created itself from where the whole movement started. So you pay attention, if you go to the daily time frame, you're able to identify that it came to this candle right here, okay? This up candle before the start of the down move. Now, typically, I like to go ahead and look for 50% of that up candle to down move or the overall movement itself. And this is going to guide me to a very nice level, which is going to be at 1.33750. Okay, this 1.33750 is going to be a nice psychological level as well that I want to take in consideration for my trading. Now, going back to the 4-hour time frame, you are able to see that this candle, okay, is actually starting off where this one starts. Okay, so this line starts off where this candle starts. You can see market coming to the downside, comes up and taps very, very nicely for that potential entry. Now, the question would be, hey Mauricio, where do you put your stop losses, right? So my entry was right here. My stop loss would be above these areas over here, those highs. And my take profit would always be targeting the lows in the market. So for example, this would be the first low in the market. And then market has traded some liquidity for later on in the future. So that would have been a good TP of about a 1 to 5 risk reward. Now, if you want to go ahead and get a better entry, right, I would suggest you to wait for all this to happen and then go in detail with this area right here. This area right here is going to give you a nice schematic on the 1 hour 30-minute time frame where you're going to be able to pay attention to these details right here. So you see market has created equal highs, market has done a big push to the upside, and this right here is where I'm going to be looking into, that big push to the upside. But I'm going to look into it on the 15 and 30-minute time frame to see if there's a point of interest. And as you can identify, market did create a nice point of interest right over here. So this right here would be a nice point of interest. And then also, this right here would be a nice point of interest, meaning that our entry would have potentially been within this area right here, and our stop loss would have been above this point of interest, leading us for a good take profit of the same amount of pips, but different risk reward. Now, instead of going at a 1 to 5, you are potentially maxing out at a 1 to 7 risk reward. So you went a 2% above of the original entry. So that is why it's important to go from bigger time frames, look at expansion moves, then look at imbalance zones, and then later on go into smaller time frames. But for right now, focus on finding those expansion moves, focus on finding those bigger time frame movements, and overall focus on finding those details as far as where is the market imbalance, right? Where does it have to rebalance in the near future? So with that said, I hope you guys enjoyed this session. I'm going to go more in detail with more things as far as this. I know this was a little bit complex and a little bit all over the place, but I'm going to go ahead and show you guys more detailed information coming up soon. So stay tuned. Make sure to subscribe and like that video so we can go ahead and help the YouTube algorithm. See you guys in the next one. Bye-bye.